When you go work and earn money, you also earn money for the government. For most people, it is taken out of their paycheck before it reaches the bank account, and thanks to that, they barely realize it. And for the rest of people, it's taken in one go when tax season arrives. And that money we pay to the government on our income is what we call income tax. And that's what we'll dive into in this video. So let's get into it. What exactly is income tax? Income tax is simply a portion of the money you earn that goes to the government. That's the whole idea. If you have a job, run a business, or make money in almost any way, a percentage of that income is taken as tax. Think of it like this. If you earn $100, you don't actually keep the full $100. A part of it, maybe $10, $20, or even $50, depending on your situation, goes to taxes, and the rest is what you actually keep. The key word here is income. So that includes wages, freelance work, business earnings, and sometimes even investment money. If money is coming in, income tax is usually involved. And this isn't just one country, it's something used almost everywhere in the world as a main way for governments to collect money. Now let's walk through how income tax actually works, step by step, because this is where things usually start to feel confusing. First, who pays it? In general, anyone who earns above a certain amount has to pay income tax. If you earn very little, you might not owe anything at all. But once your income passes a certain level, like let's say $10,000, you're expected to contribute. The minimum amount depends usually on where you live. Now, when is it usually charged? If you have a regular job, taxes are usually taken out automatically before you even get paid. That's why your paycheck is smaller than your full salary. But if you're self-employed or freelancing, you often have to calculate and pay your taxes yourself, usually once a year or in smaller payments throughout the year. And that leaves us to probably the most important part. How exactly is it calculated? Most systems use something called tax brackets, which means your income is taxed in layers. For example, the first part of your income might be taxed at a low rate, the next part at a higher rate, and so on. So if you earn more money, only the extra portion gets taxed at the higher rate, not everything. Let's give an example so you can visualize it better. Imagine a country where you pay 10% on the first $50,000 you make and 20% between $50,000 to $100,000. That means if you make $100,000 per year, you pay $5,000 of taxes on the first $50,000 you made and $10,000 on the second $50,000 you made. And so in total, you will have paid $15,000 in taxes for the year. This is the kind of system that most European countries, as well as the US and Canada, use. And that leads us to something a lot of people misunderstand, and it actually causes unnecessary stress. Many people think that if they move into a higher tax bracket, they'll somehow lose money or end up worse off. But that's not how it works. Only the income above that threshold gets taxed at the higher rate, not everything you earn. So if you get a raise, you're still taking home more money overall. Another thing people often miss is the idea of deductions and tax credits. Deductions reduce the amount of your income that gets taxed, which means you could end up paying less overall. Credits go even further. They literally directly reduce the amount of tax you owe. Because of this, two people earning the exact same income might pay completely different amounts in taxes depending on their situation. For example, a common way a lot of people reduce their taxes is via retirement accounts. In a lot of countries, the amount of money you invest in your retirement account reduces your taxable income. For example, if your country has a flat income tax rate of 20% and you made $100,000, you owe $20,000 in taxes to the government. But let's say you invested $10,000 in a retirement account. The $10,000 is deducted of your $100,000 taxable income, and now you can only be taxed on $90,000. And so in this scenario, you would now only have $18,000 to pay in income tax to the government. And that leads us to one more important point. Your salary is not your take-home pay. Your salary is what you earn before taxes, while your take-home pay is what actually ends up in your bank account after taxes and other deductions are taken out. Understanding that difference makes a huge impact on how you plan your money. Now, like almost anything, income tax has both advantages and disadvantages, and it's important to understand both sides clearly. On the positive side, the biggest benefit is that it funds public services. Things like schools, hospitals, roads, and emergency services all rely on tax money to operate. Without income tax, most of these systems wouldn't function the way they do in a lot of countries. Another advantage is that it can help reduce inequalities. Since higher earners pay a larger percentage, income tax can help redistribute resources and support people who need assistance. It also allows governments to invest in long-term improvements like infrastructure, education, and research, which can benefit everyone over time. But there are obviously downsides too. The most obvious one is that it reduces your take-home income. You don't get to keep everything you earn, which can feel frustrating, especially when you're just starting out. Another issue is complexity. Tax systems can be confusing, with different rules, brackets, and deductions that are hard to fully understand. And finally, in some cases, higher tax rates can discourage people from earning more, because a larger portion of that extra income goes to taxes. So overall, income tax is a system with clear benefits, but also real trade-offs. And that's without mentioning that all of this is assuming your government uses your taxes correctly, but that's a conversation for another day. Now, income tax systems vary a lot depending on the country, and this can really change how people experience it. Some countries have very high income taxes. For example, places like Sweden or Denmark are known for higher tax rates, where people may pay a larger percentage of their income, sometime above 50%. But in return, they often receive strong benefits like free healthcare, education, and extensive social support. On the other hand, some countries have very low or even zero income tax. The United Arab Emirates is a common example, where individuals often don't pay personal income tax at all. That means people keep more of what they earn, but public services may be structured differently or funded in other ways. Then you have countries like the United States, where income tax falls somewhere in the middle, using a progressive system with multiple brackets, deductions, and credits. So depending on where you live, the balance between taxes and benefits can look very different. And so you understand that at its core, income tax exists to fund the government and keep a country running. Because believe it or not, running a country is expensive, and governments need a steady way to collect money, and income tax is one of the main ways they do that. The money collected is used for a wide range of things, including building and maintaining infrastructure like roads and bridges, funding public education systems, supporting healthcare programs, paying for emergency services like police and fire departments, maintaining national defense, and providing social programs that help people in need. Instead of charging everyone the same amount, income tax adjusts based on how much people earn, which makes it more flexible. It's essentially a system where everyone contributes a portion of their income to support the society they live in, or at the very least, that's what it is supposed to be for. If there's one thing to remember from all of this, it's that income tax isn't just money disappearing from your paycheck. It's money being redirected into the systems and services that you use every day, often without even realizing it. Yes, it reduces what you take home, but it also helps build and maintain the world around you if used correctly. And once you understand how it works, it becomes a lot less confusing and a lot easier to manage. If you found this video helpful, make sure to support the channel by giving a like and watch one of the other videos showing at your screen right now.